The US dollar had a busy week, but one theme stood above the rest. Markets spent the week balancing geopolitical tensions in the Middle East against changing expectations for Federal Reserve interest rates. And that tug of war kept the dollar moving in both directions. The week began with the dollar finding support after renewed tensions between the United States and Iran pushed oil prices higher. Concerns over possible supply disruptions throughout the Strait of Hormuz lifted inflation expectations, leading traders to increase bets that the Federal Reserve could keep interest rates higher for longer. Attention then shifted to the release of the Federal Reserve's June meeting minutes. While policymakers kept interest rates unchanged, the minutes showed they remained divided on the next move. Several officials still see inflation as a risk and believe another rate hike could be needed if price pressures remain elevated. That reinforced the view that the Fed is not yet ready to ease policy. Economic data painted a mixed picture. Initial jobless claims came in better than expected, showing the labor market remains resilient. However, continuing jobless claims edged higher, suggesting that workers are taking longer to find new jobs. Investors also heard from New York Fed President John Williams, who repeated that inflation remains above target and continues to require close attention. By the end of the week, sentiment shifted once again. Reports that the United States and Iran were preparing to resume peace negotiations reduced demand for safe haven assets. As oil prices eased and concerns over energy-driven inflation moderated, the dollar slipped for the third consecutive session, giving back some of its earlier gains. Looking at the chart, the dollar index remains above the key 100.50 support area, even after this week's pullback. While buyers remain in control of the broader trend, the recent decline suggests traders are waiting for fresh direction. Next week, markets will be watching US inflation data closely. A stronger than expected CPI reading could strengthen expectations for another Fed rate hike and support the dollar. A softer inflation report, however, could extend the recent pullback. Do you think the US dollar resumes its uptrend next week, or is a deeper correction beginning? Let me know your thoughts in the comments below.